Hello, welcome to this market update through YouTube. So I wanted to just quickly cover some developments in everyone's favourite currency, or maybe not, the British pound. Obviously, a lot of this being shaped by both movements in the US dollar. So there's been some movement stateside, but also related to Brexit, and actually the general mood as far as the dollar has been a softening. And hence we've seen a bit of strength in the euro. Not quite so much the case in the British pound. Actually, the pound has been dropping a bit over the past week and a half or so. My general read on the situation is that there was some good optimism moving into the parliamentary votes that were held a week or so ago, that actually parliamentarians would generally try and adopt a delay to the Article 50 process, push Brexit back by a few months, and maybe, just maybe, there'd be a second referendum. But at the moment, Theresa May and the government are holding pretty firm on the March 29th deadline. And it looks like maybe the EU is conceding on some points. If you look at some of the comments from Angela Merkel, who's not directly involved in negotiations, but obviously has a big impact, saying that maybe some compromise is possible. So while the two sides are negotiating, obviously the clock is ticking. We get closer to that no deal scenario. And I think you're seeing some risk coming off the table in the pound. The ultimate belief is that no deal is going to be averted, but there's a bit of worry creeping back in after the decent run we had in the British pound. Now this is the daily chart I've got behind me. Basically, this is the run that we've been characterizing, the move higher. We hit basically this longer term zone of resistance from sort of the September through November period last year. We hit a couple of peaks. One was 133, one was 131.80. Basically, we just creeped above the 131.80, 132 in essence. We've topped out there, and a development as of yesterday, if you see, I kind of zoom in on these candlesticks a little bit, is that we made a low, we bounced, but we didn't make a higher high. We've in fact just made a lower low as of yesterday. We broke the low, closed below it, and today we're following through on that weakness. Now this is actually a bearish engulfing candlestick, but it's very low in the drop. It's basically, you'd want to see it a bullish engulfing candlestick to buy into the dip at this point. This is very low down. So although it pointed to more weakness, which we are seeing today, I would suggest nearing this old resistance, this old high, and the 20-day moving average is a little bit low to be selling sterling down. Now obviously this could just fall off a cliff and drop much lower. But from a trading standpoint, you want to try and minimize your risk for these downside moves. And at the moment, the currency's already dropped. So my interpretation here is that having hit that longer term area of resistance we've identified, an additional confirmation from a break of this rising RSI trend line, which quite clearly showed the uptrend has broken. What we want to do is wait for a little bit of short-term relief through whatever means that comes. Maybe it's a dollar-based phenomenon. We're going to bounce higher, somewhere back above into the 131s. And then at that point, we potentially see, after this lower low, we see a lower high. And then we look for some confirmations to the downside, and potentially just this big breakout area here, where it was resistance, we popped up, and we found support there later. It's basically in the 128 to 128.50 vicinity. Potentially around there would be a downside target before ultimately we see some more resumption of the upside and maybe a break of that 132. All right, I hope that all makes sense. Thanks very much for watching, and good luck with trading the British pound if you are choosing to do so. Cheers.